So the topic I was given to was to talk about digital transformation. So then what not talk about money like most of us do? One thing I need to clarify is that I am not a trained economist. So my talk will be shown of diagrams. I'm a self-taught economist. So I have not gone to any formal classes to study economics. So what is the money is the first question I ask you. Most of us don't even understand what is money. Money is a method to transfer labor and services from one person to another person. If I were to do barter, then I may need a particular service from a friend, and the product I have may not be needed by him. And this will get to a disparity in terms of pricing and exchange of goods and services. So mankind invented goods and the method to avoid barter and transfer money between two of us. And that is how money was invented. Money is not the note that you've seen. Across civilization, money has meant different things at different points of time. People have used seashells, people have used salt, people have used cigarettes, people have used tobacco, and people have used gold. And then, and today we have the paper currency. I am not here to lecture you on the history of money. That would take me a lot of time and another day and another subject. Money has two primary consequences or primary needs. One, it has to be a storehouse of value, relatively stable. That is, what I buy for 100 rupees today should be available for 102 to 105 rupees tomorrow. It cannot be 113 or 114. The other, it should be a medium of exchange between two people in an economic system. This great land of ours is an economic system where we accept the Indian rupee as sovereign currency. So whether you are in Assam, Guwahati, to a person who knows only Assamese, 500 rupee note is a 500 rupee note for him and for you. So it's universal across the country. At the moment you go out of the country, even to a place like Dubai or Singapore, where there are a lot of Indians, the rupee has no value. Unless the person with you, you transact, has a base in India and needs the rupee. It tells you the geographical limitations that money has. Of course, there is a reserve currency in the world. The reserve currency in the world at this point of time is the US dollar. But history has recorded three reserve currencies. The Dutch guilder was the first reserve currency of the world. Then, of course, the British pound, and now it is the US dollar. So most of us spend our time wondering when the end of the dollar will come. But I would like to tell you that the dollar will not go out in my lifetime. So now, having said this, then we want to know what is digital money. There are a lot of variations of digital money. What some people call Bitcoin as digital money. Some people say Paytm or the digital wallet is digital money. And so what is digital money? Money that is transferred between one person to another person without having to take out a note is digital money. Where was digital money first invented? Widely used. It happened in the most unlikely of places. It happened in a land called Kenya. Why did it happen in Kenya? Because less than 10% of Kenyans had bank accounts in early 2000. And all of them had a phone, not the smartphone that you carry today, the Nokia 1010. If most of you who are above 30 years old must have seen a button phone at some time or the other. So they had a button phone. And so Vodafone discovered that since most of them didn't have bank accounts and there were not enough bank branches at that time, people were buying and selling airtime. You have those prepaid times you guys buy and you use that. It was used as a storehouse of value. So when people wanted to transfer money from one person to another person, they were transferring airtime. Why did they do this? Because Kenya is largely a rural city And so to move from one place to another place was very risky with money. Whereas if I had a phone, I could buy or sell my airtime. And there was a dealer across wherever I went, there was a dealer. There were more dealers in airtime than there were banks. And therefore, it was more convenient to buy and sell airtime. That was the first form of digital currency. So, like I said, you could use air, you could join along with seashells and cigarettes. You can also add mobile airtime as one of the currencies of the world. So Vodafone, along with a company called Surfacom, decided they could exploit this. So what they did in 2002 or 2003, about 18 years back, is they announced that they would get a lot of banking correspondence. People with cell phone. Suppose you needed to give deposit some money and you wanted to go to a different place, you didn't want to carry the money. You had to send a message on the phone. Somebody with the same code would turn up. You would give the money to him. You would be immediately intimated that the money has come to your account and you didn't have to deal with the cash. If you wanted to withdraw cash, you would find a walking ATM quickly who would give you the cash. The company would settle accounts with these correspondents, and that is how digital money was formed. So people didn't have internet. So one of the problems of having digital currency is not all places have internet, not all places have mobility. So you needed a place where even if I do not have an access to internet, I should be able to access to my money. And that's what this Kenyan money did. They called it M-Pesa. Pesa is money in Swahili. நம்ம ஊர்ல பைசான்னு சொல்லுவாங்க பெசான்னு சொல்லுவாங்க. So there is a lot of relationship between African languages and Tamil. In fact, there is a language spoken in parts of Africa which is remarkably similar to Tamil, because all of us have come from Africa, only the time differs. So this was the first currency. Most of us won't even know this, but today all of us will know that is Bitcoin. Bitcoin is the craze of the world today. And I am not very popular among the young because I say this cryptocurrency is a sham. Why is cryptocurrency a sham? The right to issue a currency and tax is the right of a sovereign. I may disagree with the government of the day, with the party which is ruling my country today, but does not mean I disrespect the government of my country. You have to distinguish between the sovereign and the ruler. A sovereign exists forever, a ruler goes and a new one comes. If you look back in the history of Tamil Nadu, you would have seen many rulers come and go. And in your time, you will see many more rulers come and go. So, one should not confuse rulers for sovereign. The right to issue currency is that of a sovereign. And there are two forms by which a sovereign exercises this right. One is through fiscal policy, where through taxation, I determine how much money should be levied as taxes and how much money should be left with the hands of the people. The other, through a monetary policy, through the Reserve Bank, decide what should be the cost of money and how much money should be circulating in the system. By regulating the money in the circulation, I can control the economy. If I can control the economy, that is, during COVID, there was a great problem. A lot of people didn't find work across the globe. So what the Reserve Bank did here is loosen the monetary policy, make an accommodative stand, make money available freely for who wanted to borrow. Other countries went one step forward. They printed money, gave it to the government. The government of the day decided to distribute it freely among the people. That's what happened in US and in many other countries. We may agree, we may disagree. But in times of need, you need to have a strong monetary policy. At that time, we needed a lot of money. Now we need to tighten because inflation is there. And everybody in economic circles and market circles is talking of the American tightening cycle that is going to start. If crypto were to be replaced replace the Indian rupee for a change, then what would happen is the monetary and the fiscal policy of the sovereign will become ineffective. And when monetary policy and fiscal policy becomes ineffective, money will accumulate in the hands of very few. And already the huge disparity between the haves and the have nots will increase. For a country to be stable, you need to have a strong monetary and fiscal policy. This is particularly true, as I will discuss, with other countries where the government of the day has been corrupt and the central bank has colluded with them and has created a situation where a country cannot have its own sovereign currency. I'm going to talk about Ecuador, which introduced the first digital currency in the world and which had a problem because there is no Ecuadorian currency. The US dollar is the currency of the Ecuadorians. We call it dollarization. So, the idea that the Western world will allow bitcoins and others to proliferate without cracking down is a fact that at the first sign of trouble, if I convert all my rupee into a cryptocurrency, there are other problems with the cryptocurrency. But since I'm talking in a commerce department, this is what I wanted to highlight. If everybody converts it into a cryptocurrency, then what will happen to the fate of the rupee? Now, at this point of time, Japan, in its own interest, has decided to take a divergent monetary policy from that of the rest of the world. The Japanese rupee, yen, has fallen tremendously and is trading at a 20-year low of 127 yen to a dollar. But that is Japan's interest. But if the Bitcoin was the currency of the day, then everybody would have left yen and gone to Bitcoin, and the economic policies of the Japanese government would have no effect. This is my primary grouse with a private cryptocurrency. But all the claims that they make that it is safe, it's private, is all hunkum, bunkum, and proven to be so. We will visit that, but it's too small a time to demolish this argument in great detail. So this is the main heart of what we call is the basis of all digital money today. Though M-Pesa did not have all this. This is called the blockchain technology. That is, if I have a 1,000 rupee note, which is now demonetized and is illegal to have, then it travels through from here to the gentleman at the very end, will change 5 hands and go. So, if I am a salaried person and I have got that money in my salary account, it's white money, it's taxed. I give it to my doctor who is sitting in the front row and he doesn't declare it. He goes to the restaurant that day and spends it with his wife. The white becomes black because he has not declared that income. As simple as that. He pays to the restaurant owner who has given a bill and therefore the black becomes white again. If you give it to the restaurant owner give it to a supplier who is not providing him with a bill, it becomes black again. So, first the assumption that currency can be painted in colors like black and white needs to be thrown out of the window. Whether money can be accounted or not accounted is the question. Accounted money is white money, money which is not accounted is black money. So the great thing, as like I told you about currency, is trust. So the guy in Assam knows a 500 rupee note, you know a 500 rupee note. In case of a blockchain, what happens is that all transactions are recorded. So I can pick up the entire history of where this Bitcoin has gone and take it out. So it is programmable, it is supposedly secure. I will demolish that argument. It is anonymous because nobody knows where the Bitcoin is. And it is unanimous because a lot of people will verify a transaction when it moves from one person to another person in is called as a proof of concept. And then it is time stamped. That is, you will tell me when this Bitcoin reached where. You can look at the entire history of that. It's immutable because everybody would have seen that this Bitcoin belongs to me. So there cannot be two transactions with the same coin. And there's a distributed ledger, which we won't have much time to talk here. This is called the distributed ledger technology, where everybody can look at it and verify it. But if I start talking, it will take more than a day to finish that. So This proof of concept is there's an open ledger where everybody who's got a Bitcoin, doesn't have a Bitcoin, can be a part of the authentication. They will authenticate a transaction. As it takes longer and longer, time taken to do this transaction does vary. Why does somebody authenticate a transaction? Because there's a reward. Every time I authenticate a transaction, you give me a bribe, a small portion of a Bitcoin. So most of us argue, and I don't want to go in depth, there is the amount of Bitcoins is hardwired into the program. On a particular day, so I don't remember the day exactly, about 2 years from now, the last Bitcoin would be mined. Then who will do the proof of authentication is a complaint. Now they are trying to address it through other methods. But that is the problem with Bitcoin. So they had to come up with other sources of coins which are better. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.